Good day, everyone, and you are welcome to Total Reward Insights with Jill Assisi. On today's training, I'll be taking us on statutory remittances. Yes, statutory remittances, statutory deductions are the same. So, statutory deductions are payments mandated by law, and they are legally required payments. And these deductions are withheld by the employer and remitted to the appropriate government agency. And these deductions are not just made from the employees alone, part of it are borne by the employer. And these combined deductions are both remitted to the appropriate government agency. So the HR department computes these deductions and prepares the schedule, then sends to the appropriate agency while the finance department makes payments. So the HR and finance department works hand in hand in the process of employee remittances. Like I said, these deductions are not just from the employees alone. The employer also bear some of the associated costs. So talking about the deductions from the employee, the deductions removed, taken out from the employee salary. One is PAYE, your PAYE tax. PAYE tax is known as pay as you earn. This is governed by the Personal Income Tax Act and it is subject to the tax table. So PAYE tax at its computation, and the calculation is not just derived at one go. There are deductions, consolidated relief allowance, there are tax relief, taxable income, and the likes before arriving at the figure for PAYE itself. So some individual believes that PAYE calculation is just by applying percentages, which is wrong. Its computation adds step and must be followed and computed in line with the Finance Act. So PAYE is deducted from the employee salary and remitted to the State Internal Revenue Service of the employee location where the employee resides. And this deduction should be remitted within 10 days following the month the employee was paid. So the second deductions from the employee salary is pension. Yes, pension. Pension is a statutory deduction, and the employer also pay part on behalf of the employee. And this is also backed by the Pension Reform Act. And the deduction is of two parts, one from the employee, which is deducted from the employee salary, and the other is borne by the employer. And the one borne by the employee is just 8% of the basic housing transport. And for the employer, that the employer made on behalf of his employee is 10%. The employer also paid 10% basic housing transport on behalf of his employee to the employee retirement savings account, which sums to 18% in total. And every employee are expected to have an RSA account, which is retirement savings account, and each retirement savings account belongs to a pension fund administrator. And each pension fund administrator, which is known as PFCs, have PFC, pension fund custodian. So understanding retirement fund is a cost, and I'll be dropping a video on pension for you to have an understanding on your pension remittance and how to go for your claims and others. So stay tuned on this channel and never miss on any of the Total Reward Insight interesting video. So back to pension, the 18% in total will be remitted to the employee RSA account, and even before now, pension calculation used to be 7.5% for both employee and employer under Pension Reform Act 2004, but now it is 8% for employee and 10% for employer using the Pension Reform Act 2014. So if any company or organization have 15 and above employees, it is mandatory, it is compulsory for that organization to contribute pension. And any employee who is out of job for 4 months can claim some parts, which is 25%. So pension schedules are prepared and sent to PFA to credit the staff retirement savings account. There can also be a voluntary contribution from the employee, aside from the 18%, from the employee who wish to contribute more to his or her monthly pension. And this is known as voluntary contribution. So the third deductions taken out from the employee salary is NHF, National Housing Fund. It is deducted from the employee salary, and it is also backed by National NHF, National Housing Fund Act 1992. and the computation is 22.5%. Is 2.5% of the employee basic salary, and this is deducted and remitted to the Federal Mortgage Bank. And now NHF is not mandatory, it is voluntary. So for any employee who wishes to contribute to NHF, it is 2.5%. So there are also some statutory remittance made by the employer on behalf of his employee. Like I said, there are some deductions that it is not bear all alone by the employee. The employer also bears some deductions which serve as the benefits to the employee, and one of which is NSITF, National Social Insurance Trust Fund. So the computation is 1% of the total monthly pension, and this provides insurance benefit for workplace injury, and it is backed by the Employee Compensation Act. So 1% is calculated and remitted to the NSITF, and this does not affect the employee salary because the employer contributes that. It serves as a benefit. The employer pays do that on behalf of the employee. So the benefit behind this remittance is that it is an insurance for employee, and this is to insure for workplace related accidents or deaths within the workplace. So this deduction is borne by the employer directly. So the second deduction borne by the employer is the benefits, is pension. Like I said, 8% of the employee and 10% of the employer. So the employer also bears 10% on behalf of his employee. So 10%, the employer contributes 10% to the employee's pension account. So the third one is ITF, Insurance Trust Fund. So the calculation is 1% and it is remitted to ITF. This is backed by ITF Act, and the remittance helps to support employee training within the organization. And there are processes to ITF as well. The employer can be reimbursed and claims can be made, but for the sake of today's video, I won't be diving deeply on ITF. This deduction is also borne by the employer directly. And the fourth is NHIS. NHIS is National Health Insurance Scheme. This is generally known as HMO, that we know as HMO. HMO are borne by the employers, and this is in line with the agreement with the HMO provider, and it is backed by the scheme NHIS. So that's it for today's insight on statutory deductions. If you find this video helpful, kindly like, share, and subscribe to my channel for more insights on total rewards. Thank you.